What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over Virgin Galactic Holdings, ticker symbol SPCE. And they had an insane run up today, as we can see, up 17%, as well as 2% currently in the after hours. Being up almost $9 on the day, starting at a pretty rough pre-market, down 5-6%, sitting at around $42 and ending the day at just under $54. Amazing day for this company. As you can see, I'm still holding 100 shares, and we're going to continue holding this company for the long term, as I do think this is a long-term hold, and it is one of the only space stocks on the market currently. So why is Virgin Galactic Holdings soaring this much today? Overall, the market today was pretty red, as we can see on the heat map. Tons of red in the market. So seeing SPCE having an amazing green day is a very good sign for a lot of retail investors. So they're soaring because of rumors. Virgin Galactic Holdings, Virgin Galactic is planning to launch co-founder Sir Richard Branson into space this weekend, which is pretty interesting news. So a lot of people are buying into the stock off of that news, and we don't know for sure if it's going to be happening, but it's pretty much a rumor at this point. So everyone's jumping into it because if it is true, the stock could skyrocket. Now, of course, if it doesn't, this stock will definitely have a nice pullback. So my plan is to sell some covered calls against my shares, or possibly even selling some cash secured puts, because right now volatility on the stock is pretty high. As you can see, call options are up 400-500% on the day today. So selling some call options would be pretty sweet. So I'm considering maybe next week, or even doing a July 9th, which is one day out. You can sell say a $65 call and collect $40 premium. I highly doubt SPCE will jump to $65. So that would be pretty good as well. I would probably even do like a $60 covered call, but I'm probably going to do 1 week out, July 16th expiration date. The premiums are pretty high, as we can see here. Apply volatility 260%, and that's pretty high for something like this stock, which has been pretty flat until recently when they announced that they were approved to launch customers into space. So I'm going to protect my shares, protect my capital, and I'm going to be considering something between a $60 and a $70 covered call. So we're going to be selling these calls. If you have 100 shares, you're able to sell calls. If you don't, then you're not really able to, unless you do something called the poor man's covered call, which is another option strategy that we will go over later on. But I'm considering something between $60 and $70. And as we can see on the right side here, we will collect almost a few $100s of premium, which is pretty sweet. $65 is going to probably be what I'm going to be selling. So let's do an example here. We're going to be selling a call. Make sure you're on sell, make sure you're on call, and we're going to be shorting these calls. Click on one, enter in one, limit price 4.40, and we're going to be receiving a credit of $440 with collateral being put down of 100 shares. So basically what this means is if SPCE stays below $65, this contract is going to be expiring worthless, which means we collect our $440 premium in full, which is a maximum profit for the trade, and we win on it. And of course, if SPCE goes above $65 by next week, we still have to sell our 100 shares at $65 each, which is going to give us not only our minimum credit of $440, but we're also going to be selling our shares at a nice profit, because right now it's at $53.82, and we're going to be selling our shares at $65 each, which is going to be a nice chunk of profit. But of course, say if SPCE goes to $80, we still have to sell our 100 shares at $65 each. So that is a downside of selling calls, but it does help mitigate your risk, because if SPCE does stay flat, stays below $65, you're going to be collecting $440 dollars of premium. So it does act as a slight hedge. And if you want to hedge it even further, you could do a closer strike price, such as $55, and you'll collect almost $700 of premium, which is pretty sweet. So covered calls is a great strategy to help protect your shares and help to collect premium on these contracts, especially when implied volatility is at a pretty high level, as we can see here, 273% implied volatility. So another strategy, you don't have to hold this until expiration. You could always close it out by buying it back early. So when my favorite strategy is selling contracts with high implied volatility and then buying them back at a later date before expiration when implied volatility dies down, because when implied volatility gets lowered, the premiums on the contract also get lowered. So, and you can buy them back usually at a profit regardless of the direction the stock is heading in. So that is what I usually do. But I don't think that SPCE will hit $65 by next week, so I can sell this call option for the July 16th expiration date. And if it does hit that, I don't mind selling my shares at $65. That's a nice profit, as my cost basis is at $22 per share. So that's about it for this video. Quick little update on Virgin Galactic Holdings, ticker symbol SPCE. Amazing day in the market today. So leave a like if you like the video, comment down below if you're holding SPCE, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.